Preparing for a portfolio administrator interview? You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. How would you describe the role of a portfolio administrator? A portfolio administrator keeps investment records accurate from trade capture through reporting. I would monitor trades, cash, positions, corporate actions, prices, and reconciliations between the portfolio system, custodian, broker, and fund accountant. The role matters because portfolio managers need clean data for decisions, while operations, compliance, and clients rely on the same records. My focus would be timeliness, controls, exception resolution, and clear communication when breaks appear. While answering, focus on trade support, reconciliations, cash and position accuracy, corporate actions, pricing support, reporting, and the importance of clean data for portfolio managers, operations, compliance, and clients. Question 2. Walk me through the trade lifecycle from execution to settlement. After a trade is executed, the details need to be captured accurately. Security, quantity, price, trade date, settlement date, broker, account, and commission. I would then validate it against broker confirmations and ensure instructions are sent to the custodian. Before settlement, I would monitor matching status and resolve any discrepancies. On settlement date, the position and cash movements should update correctly. Any failed or unmatched trade needs quick investigation and escalation. Make sure to cover trade capture, validation, broker confirmation, allocation, custodian instruction, settlement matching, cash impact, position update, and how unresolved exceptions are escalated before settlement date. Question 3. What types of reconciliation breaks would you expect to see, and how would you investigate them? Common breaks include missing trades, timing differences, incorrect settlement amounts, stale prices, FX mismatches, dividend accrual differences, and corporate action processing errors. I would first classify the break as timing or true exception, then compare the portfolio accounting system to custodian and broker records. If it is trade-related, I check trade tickets and confirmations. If it is valuation-related, I verify pricing sources. The goal is not just clearing the break, but identifying the root cause. In your answer, talk about position, cash, market value, income, FX, and corporate action breaks. Explain root cause analysis using trade records, custodian statements, broker confirmations, and pricing sources. Question 4. A trade fails to settle on settlement date. What steps would you take? I would start by checking whether the trade matched correctly with the broker and custodian. Then I would review settlement instructions, security availability, cash availability, standard settlement cycle, and any market-specific requirements. If the issue sits with the broker or custodian, I would contact them immediately and keep internal stakeholders informed. I would also assess any cash overdraft, buy-in risk, or portfolio impact. Once resolved, I would document the reason and preventive action. Be sure to mention checking matching status, broker and custodian instructions, cash or security availability, settlement market rules, escalation, client impact, and documenting resolution for audit trail purposes. Question 5. How do you perform a cash reconciliation for an investment portfolio? Cash reconciliation means comparing the portfolio system cash balance to the custodian or bank balance by currency and account. I would review all cash movements, settled trades, dividends, coupons, management fees, expenses, FX trades, transfers, subscriptions, and redemptions. Timing differences are common, but they need to be clearly explained. If a balance is off, I would trace transactions line by line until the cause is found. Accurate cash is critical for liquidity and trading decisions. While answering, focus on comparing book cash to custodian cash, reviewing settled trades, income, fees, FX, subscriptions or redemptions, timing differences, and explaining unresolved variances clearly. Question 6. How would you handle a corporate action in a portfolio administration role? I would first identify whether the corporate action is mandatory or voluntary. For a mandatory event like a stock split, I would validate the terms, process the position adjustment, and reconcile afterward. For a voluntary event like a tender offer, I would confirm eligibility, deadlines, election options, and communicate with the portfolio manager. After processing, I would check cash, positions, cost basis, and custodian records. Corporate actions need strong controls because small errors can affect valuation and reporting. Make sure to cover mandatory versus voluntary events, announcement validation, entitlement calculation, election deadlines, custodian communication, system processing, position impact, cash impact, and reconciliation after the event. Question 7. What is your approach to pricing securities for portfolio reporting? Pricing starts with using approved sources, such as exchange closes, pricing vendors, broker quotes, or valuation committee marks, depending on the asset. For liquid securities, I would check daily prices and tolerance movements against prior values. For illiquid or hard-to-price assets, I would ensure the correct hierarchy and approvals are followed. Stale or unusual prices should be escalated, not ignored. Pricing directly affects market value, performance, NAV, and client reporting, so controls are essential. In your answer, discuss approved pricing sources, listed versus illiquid assets, price tolerance checks, stale prices, independent verification, escalation of exceptions, and how pricing impacts NAV and performance. Question 8. How does portfolio administration support the NAV process? Portfolio administration supports NAV by ensuring the inputs are complete and accurate before valuation is finalized. I would make sure trades, positions, cash, income accruals, expenses, FX rates, prices, and corporate actions are correctly reflected. The fund accountant may calculate the NAV, but portfolio administrators help validate the underlying records. If there are reconciliation breaks or pricing issues, they must be resolved quickly. A clean portfolio record reduces NAV errors and protects investor reporting quality. Be sure to mention accurate positions, cash, income accruals, expenses, corporate actions, security pricing, reconciliations, fund accountant interaction, and resolving breaks before the NAV is finalized. Question 9. What is the difference between trade date accounting and settlement date accounting? Trade date accounting records the transaction when the investment decision is executed, while settlement date accounting records it when cash and securities actually exchange. From a portfolio exposure perspective, trade date is more relevant because the manager has taken market risk immediately. From a cash control perspective, settlement date matters because funds move later. In practice, I would track both: trade date positions for exposure and performance, and settled cash for liquidity and reconciliation. While answering, focus on recognition timing, portfolio exposure, cash movements, unsettled trades, reporting implications, and why investment systems usually track both trade date positions and settled cash. Question 10. How would you use Excel or other systems to improve portfolio administration processes? I would use core systems for official books and records, then Excel or reporting tools to analyze exceptions and improve efficiency. For example, I might use pivots, XLOOKUP, conditional formatting, and variance checks to compare custodian positions against internal records. I would also be careful with version control and avoid making spreadsheets the source of truth. Good process improvement means reducing manual work, while strengthening review, audit trail, and exception visibility. Make sure to cover portfolio accounting systems, custodial portals, Bloomberg or data vendors, Excel functions, reconciliations, exception reports, automation, controls, and avoiding uncontrolled manual spreadsheets. Question 11. What controls are important in portfolio administration? The key controls are reconciliations, independent review, segregation of duties, exception tracking, and clear escalation. For example, the person entering a manual adjustment should not be the only person reviewing it. Price changes beyond tolerance should be flagged. Corporate action elections should be approved, and unresolved breaks should be aged and monitored. Strong controls help prevent NAV errors, incorrect client reporting, settlement failures, and operational losses. They also make the process auditable and repeatable. In your answer, talk about maker-checker review, reconciliations, exception logs, segregation of duties, price tolerance checks, corporate action approvals, deadline monitoring, audit trails, and escalation procedures. Question 12. How would you monitor investment restrictions or compliance rules from an administration perspective? Portfolio administrators may not set investment strategy, but they often help monitor whether portfolios stay within mandate rules. I would review restrictions such as issuer concentration, asset class limits, restricted securities, cash thresholds, and country or currency exposure. If a potential breach appears, I would verify the data first, then determine whether it is active, passive, or caused by market movement. Any confirmed issue should be escalated to compliance and portfolio management with clear evidence. Be sure to mention pre-trade versus post-trade checks, mandate limits, restricted securities, concentration limits, cash limits, regulatory constraints, breach investigation, documentation, and escalation to compliance or portfolio management. Question 13. What information would you verify before sending a client or portfolio report? Before sending a report, I would check that the valuation date, portfolio name, base currency, positions, market values, cash, transactions, income, and performance figures agree with official records. I would also review benchmark data, fees, footnotes, and any unusual movements. Formatting matters, but accuracy matters more. If the report includes commentary, it should be consistent with the numbers. I would follow the sign-off process because client reporting is a controlled output. While answering, focus on positions, market values, cash, performance, transactions, income, fees, benchmark data, valuation date, formatting, sign-off procedures, and consistency with official accounting records. Question 14. How do you prioritize your work when multiple portfolios have tight deadlines? I would prioritize based on deadline, materiality, and downstream impact. NAV-critical funds, client reports due that day, and high-value settlement issues would come first. I would use a checklist to track reconciliations, pricing, cash, and outstanding breaks by portfolio. If a dependency sits with a broker, custodian, or another team, I would chase early rather than wait. The key is to communicate clearly, escalate bottlenecks, and avoid sacrificing control just to meet a deadline. Make sure to cover deadline awareness, risk-based prioritization, NAV or client reporting cutoffs, aging breaks, communication with stakeholders, using checklists, and escalating capacity or dependency issues early. Question 15. Tell me about a time you found an error in a portfolio record. What would you do? If I found an error, I would first verify it against independent evidence such as custodian records, broker confirmations, or source documentation. Then I would assess whether it affects cash, positions, NAV, performance, compliance, or client reporting. I would not make an unsupported adjustment. I would follow approval procedures and notify the right stakeholders. After correction, I would document the root cause and look for a control improvement. The best answer is accurate resolution plus prevention. In your answer, describe verifying the issue, assessing materiality, correcting through proper approval, communicating to affected teams, documenting root cause, and suggesting controls to prevent recurrence. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.